understanding Nigerian-China currency swap deal. Just recently, President Tinubu called on the government of China to increase the currency swap deal between the two countries beyond the 2 billion that it stands today. But we could also recall that this currency swap deal started in 2018 but expired in 2021, but the government renewed it somewhere within 2022 and 2023. But here we are today. It is being considered as one of the strategic means of engaging in a more robust trading engagement with China and Nigeria. But of it, are there issues? Prof, I welcome you to the show.
Thank you for having me.
And thanks for always obliging to be here on the Market Report show. Now, Prof is one of the leading economists in Nigeria that bring out the fact about issues about economy. But on this issue of currency swap, a lot of people are confused. What does it entail? So as a way of introduction, Prof, take us through currency swap as I've known and understand it globally.
Okay, you know, in 2018, China has always been in the code. China is the biggest export economy in the world. But they kept them in the code. So it was in 2016 that IMF admitted the yuan currency into the 4 basket of currencies. So there are now 5. The first ones are dollar, pounds, yen, and euro. So admitting them in that basket also means that they will access the special drawing rights of the IMF, which is a national reserve policy of the IMF, and it has its own things to bring about. Now, within that 2 years, Nigeria began negotiation in 2016 with them. By 2018, we came to an arrangement. 2 African countries have gone into swap. So Nigeria became the 3rd African country to enter into the swap arrangement. The arrangement was for $2.5 billion. And because yuan has entered the basket of currencies, we now have to hold 4.5% of our reserves in yuan. So that paved the way for us to go further. And then we have the 3-year term for that 2.5 billion. And our Naira exchange rate then was $1 to 305 Naira. Compare that to today, when it's $1 to 1,550. So that went well. But then it ended in 2021, but COVID came in, things started getting out of hand after that, and you saw what happened to our currency. If you look historically, what was handed over to this new administration was instability, currency instability. You have a heavy deterioration of our inflation, runaway inflation, and then reserves came down. So many things that could go wrong actually did go wrong. But 18 months further, we now have a handle. Central bank now has a handle on the forex. And then even though it's still high, but it has removed the arbitrage in there and then sort of collapsed the gap, what you call spread. It has collapsed that. And that means that more confidence is coming from investors that this can be maintained over time and that those arbitrage opportunities have been plugged. So China is back to talk to us about yuan. And then this time round, they were offering 2 billion. And we think that this 2 billion is far too small, but we shall come to that.
Exactly.
The next question is, what do you need that money for? And we need it to stabilize our currency. It helps. We need it to facilitate trade. We need it to expand trade. China is our biggest trading partner. We do $22.6 billion trade with China. Although we are worse off in terms of balance of trade. So our target should be to increase our exports to China, which should actually be in non-oil products, so that we can now have greater degree of freedom in forex, unlike crude and gas that occupy 90% of our forex. We need more diversification to reduce that dependency on monocultural products. So given that it is important for those 3 reasons to facilitate trade. So trade facilitation, according to WTO and World Bank, can cost as much as 15% of global trade. So you can imagine, if our global trade is about $120 billion in and out, if 15% of it, over $18 billion, is what we suffer for trade facilitation, who pays that money? Is the private sector. So this is one of the ways of reducing that impact. And bear in mind, anytime Chinese goods are quoted to us in dollar, when you look at their renminbi price, when they want to convert to dollar, they will add about 10% for currency stability. And then when we now buy or when we are selling, we add the same 10%. And so in any case, you lose about 20% in that transaction cost going in and out. So it's part of the thing that it reduces. Now, what would we use this money for? Is another important question. Because if we are trading with China 22.6 billion, why is it that only 2 billion is made available? And what exactly do we intend to use that money for?
Exactly.
So one, we use the money, a lot of that money can be used in, not in servicing debt, because I have to keep saying that that is the wrong way to go for servicing debt. You can go for SDR. When IMF releases, the special drawing rights, China will get a large chunk. So Nigeria can get some of that because it's at concessionary rates to help in repaying some of our loans, but not swap. Swap money looks at first infrastructure. If we have a lot of infrastructure projects with China, railway lines, building the airports, building so many things, road construction. So some of that money can go there, but it's not a lot of money for them because that will swallow the money. That one is when I did in 2015, when I did the bid for one Chinese company for Port Harcourt Maiduguri railway line. My bid came in at $10.5 billion. That means that it will chop that whole money for 5 years, just building one rail line. The second thing is capital projects. We import a lot of machineries, cars, trucks, steel, construction materials from China. It doesn't matter where we borrow the money from. Eventually, we'll go to China to buy the cheapest. So we need a lot of that money there, but it is a drop in the ocean compared to all that requirement. Then you have the human capital development. When equipment come, you have to train the people. So there's costs associated with all of that in terms of HRD. Then you also have currency. You have foreign portfolio investment. And then foreign direct investment coming from China. They too want a call on that money for part of their investment. So not enough. Then the most difficult one is consumer products, consumer goods. Consumer goods are those things that we are struggling to stop importing into the country. Textiles, this, that, all these perishable goods and food. They are the worst because now that we have consumer credit explosion coming in, all that money, if care is not taken, we will be channeled to import goods from China. Easy. And that thing won't last 1 month on frivolous import. So we need to watch that. And that's where the government, the CBN should also be thinking about what I call forex demand management around the swap. Because you've got to control that so that it doesn't become a big influencer on our inflation.
Now, Prof, there's one controversy that came up when President Tinubu made this demand on the Chinese government. One popular Nigerian lawyer, well-renowned Chief Falana came up and said, no, the government should not go that route. That is detriment to the Nigerian economy. Can you help us make it so simplified so that people can understand that these are economic issues? They are not.
I have enormous respect for Falana. I really, really do. After Rotimi Williams and Ganifa with me, I have a lot of respect for him. But I think he ought to understand that he's delving into a very serious aspect of our macroeconomy, which is monetary policy. So on that count, I would want to reserve my comments on him because I want to say that decision is the right one for this country, but we have to have all these caveats that I'm saying. The big question that the president was asking for so much more. Let me address that.
Exactly.
How did we arrive at 2 billion? There are three ways you can look at it. One, if you are looking at our GDP, the real GDP at 200 billion, 199.8, you may well say, oh, maybe they're looking at 10% of that GDP, so that's 2 billion. But I don't want to look at that because that is neither here nor there because our real GDP in Naira keeps going up. It is the deflator, which is the exchange rate, that brings it down to 200 billion. If today we say, okay, we're going to get this exchange rate from 1550 down to half, 50% half, which is 708 something, that GDP automatically goes from 200 to 400 billion. You can see it's academic. But our purchasing power parity is the one that stands, which is a good measure of the value of goods and services in Nigeria, and that is $1.28 trillion. Purchasing power parity. So that keeps us at number one in Africa, irrespective of this dancing up and down of the real GDP. You know, so that's because it's based on the notional value of dollar, international notional value of dollar, which actually gives you an accurate measure of the size of this economy. So people who really want to come into this economy, that's what they are looking at. Because if you are saying that, that Nigeria has a potential to consume the 220 million, our potential to consume toothpaste has suddenly gone down to half. The population is growing. It's not going down to half. It is still there, but the currency situation keeps on giving a wrong picture of what we are. Then the third one, so if you are looking at 10% of that purchasing power parity, it would have been $12.8 billion that they should be looking at. Then the third one is the volume of trade. If we are doing $22.6 billion, 10% of that will be $2.6 billion. But you shouldn't be giving us 10% based on our volume of trade. It's like turnover, and they are looking for going to a bank and asking for credit. You should be looking at about 20% of the volume of your trade. So that would be like $5.6 billion. So in the average should be around that 5 to 6 billion to make sense. Then the second thing he complained about is 50 billion to Africa.
Yes,
that is nonsense. That is nonsense. You know what? Because Africa requires $100 billion every year in infrastructure alone for the next 10 years. Exactly 93 billion. But Nigeria requires 20 billion every year for the same period of 10 years. So that 50 billion to Africa, Nigeria will consume that in 2 years. So we do need support there. It's not free money. It is just creating line of credit for your companies to come and do the business in Africa. So why are you restricting us that much? Do you understand what I mean?
Very well, sir.
So that's the second. So however you look at it, the money is too small. The quantum is low. And then of course, the other thing that should also come with it is how they look into investing more in gold refinery in Nigeria. Because we have gold everywhere in Nigeria, in at least 6 states. So if you refine gold here, now the BRICS are heading out to gold reserves. So put your investment in refining gold here and then buy the gold from us. Of course, we too need gold in our reserves so that we will do a lot much better. You know, so that is the second part.
Actually, let's stay on the side of the trade, because most Nigerians that have been able to grasp the understanding of the currency swap majorly think towards the trade volume that you have been mentioned. So in terms of the benefit generally, how are we going to see the benefit on Nigerian economy with this currency swap and Nigerian trading with China?
No, the trade with China, as I said, being the biggest trading partner, is bound to increase. But we are saying that it should increase in the direction that benefits us the most. The direction that benefits us the most is to help us in solving our monocultural economy impact on our forex. So, which is diversify in helping us buy some of our goods, so that some of the people importing from us, when they want to pay us, it's better for us that the Chinese importers from Nigeria pay us in yuan. So that our yuan quantum keeps increasing. Do you understand?
Very well.
Okay, so that's one. But they have to buy our goods. The whole thing is about buying our goods. So we need to move in that direction. So if they are coming to joint ventures with Nigeria, it should be part of it should be, yeah, you are investing to produce this, but you must also be buying some of those transfers. You know, so that makes it more helpful to us. Then of course the second aspect is that we need more of this currency to enable us expand your support. For example, if we are going to be doing about $20 billion a year, they will be going to be under that on infrastructure plus construction and all of that. The more you make available to us, the more you can fund this project that you already committed to bringing into Nigeria. And because it's about giving them lines of credit to be able to do the business. If they are going to be so small, $20 billion projects all added together from China in this 2025 will now take 5 years to complete. Rather than complete them within a year or two. China has the capacity to do this 20 billion in 1 year. What is 1 year?
Exactly. Now, another specific issues that many Nigerians, because I went online and I saw that many people are still discussing these currency swap issues, but majority are still a little bit not too having that clear cut understanding of the impact on the naira. Because if the government is okay to reduce the volume of our trading using dollar to trade internationally, if you don't come into the space, it will help us to look for lesser dollar. Although
that will increase the value of the dollar. The less dollar you look for, the value of naira. The less dollar you look for, the stronger is our naira. Because what is making the naira weak is that you are looking, there's so much demand for dollar in your economy, and it's demand and supply. So when the demand is far too high compared to the supply, the price collapses. But when we are now demanding 60% of what we demanded last year, then our naira will appreciate in value correspondingly. And then also when you are switching to yuan and then keeping dollar by the side, you are also reducing your cost of foreign exchange transaction. And then you are also, and when you reduce your cost by 20%, it means that you can improve your trade by 20%. Or more. Do you understand?
Very well.
So it bodes well for the country because there are so many hostages and many other countries are thinking in the same direction. The BRICS are going in that direction and they are investing more on gold, so rebalancing their reserves more in terms of gold rather than in dollar. And I tell you, there are so many things about going on right now about the dollar. That the almost 60% of world trade is denominated in dollar, even the debt. And then transactions using dollar, 88%. And then also you have 20% of the GDP is in dollar. So people are beginning to worry. If your policy is, don't become a victim of your policy, because this policy of weaponizing dollar means that many countries are now looking at alternatives.
It's true.
So
now talking about alternative, there's something you quickly chip in this discussion that that swell my understanding of what we are discussing about, the shifting to gold reserve. I just saw recently that the government is also making effort. They even created an agency that will be supervising that particular sector of the economy, to the point that CBN is now being called on to buy those gold from Ministry of Mines and Industry. How do we see that particular policy helping us in this?
3 years ago, 3 years ago, the central bank had that policy to begin to finance the processing of gold so that we can be buying them up. So finance it, buy it up, and put it into the reserves so that you can balance our reserves. So some in dollar, some in yuan, some in that, some in dollar, a lot in gold. So that gives you more stable currency regime. That gives you more stable reserve, because if every time you are not sure of the value.
Exactly
of your dollar. So it's a very important policy. And then it reduces the warfare going on in this area, all the Zamfara and all that. And we have gold everywhere. At least there are 6 states. We have in Nasarawa, we have in
Niger,
Elisha. We have, and the same belt goes all the way to Accra, Ghana. So we have it in Niger State, in Taraba. We have gold. In Enugu State, we have gold. So it's just about investing, and if CBN is now enabled to do that, they can do intervention. They can do domestic finance intervention on gold for the sake that you want it to head to the reserves.
And your very good friend, Dr. Meka Okegu, was on this seat last week. And he also makes some recommendation for the government, talking about enhancing the Nigerian economy, just like the government has taken the initiative to go into currency swap with China. But he also emphasized productivity. And from what you have laid so far in terms of what this money will be used for, it focused on productive sector of the economy.
Absolutely.
So how are we going to ensure that? Because the next question I want to ask is that if the government fails to follow through this agreement, are there challenges?
No, I don't think we have choice because we need it more than they need it.
They need it.
China is the biggest reserves, the foreign reserves in the world. America borrows from China in trillions. But the problem is that America will never pay their debt. They will only print more dollars. That's the thing. That's why people are moving away. Because they take all your money, so they suck away. And they can give you good interest. 2-3%
Exactly.
interest. It's very tempting. But then, they borrow that money. Are they going to pay it back? They print more dollars. That's the thing. But economies that are going to pay it back, like Nigerian economy, is asking you, pay more attention here. Because not only that you strengthen your economic future, but at the same time you are making good money. You are making good money from doing this business and then empowering us under the South-South cooperation. Than continue to do it the other way, and then Donald Trump will come and inflict 100% taxes on you, and then you wonder. He takes your money, he doesn't pay it back, he prints more dollars, he now loads tax on you, more tariff. So. There's a choice.
Exactly. Now, let's now take another critical aspect of this issue.
But productivity is the answer.
Definitely.
Is the answer, because if you cannot add value to your God-given resources, which are mineral resources, solid mineral and oil and gas, if you can't add value to them, you're wasting your time, to be honest. If you can't add value to your natural resources God has given you, look at cassava, look at cocoa, look at all that, add value. So that you are part of 3 countries in Africa, Nigeria, Ghana, and Cote d'Ivoire, that produce 72% of world cocoa. But when you look at the cocoa value chain that you've started, you only account for 7% of that. It's not because you're not adding value. And the same goes with cassava. You produce 25% of world cassava, and you are still importing 93% of cassava derivatives for your pharmaceutical company. What is going on? Then yam, you produce 72% of world yam, and you can't export one container of yam. Each time you try to export it, it turns, it gets rotten and all that. And then all the practices and all that. And then Africa, Pan-African payment system is one that you should embrace. Because what it means is that it's the same way of yuan currency swap.
Exactly.
Because you are not using dollar to pay other African countries.
I think talking about Pan-African payment system, I hope my producer will give us opportunity one day to discuss it. It's one of the jammy discussion between 2022 to 2023. I participated in some discourse and it was way jammy. But I'm afraid, why is Nigerian government relaxing?
People benefit from the status quo. I mean, if you listened to what I don't know whether it's Bode George, somebody that I was just listening to what he was saying. He was talking about the deep end of this currency arbitrage, where most of the banks simply got money at maybe, let's say, 100 naira to $1, and then now sold it at 200 naira to $1, made money. So it was like saying, this is not real money, this is not real commerce, this is not production, this is not manufacturing. So the idea is, if you don't add value to those, you will never fight the issue of import dependency. The import dependency of Nigerian economy is the biggest challenge we have in our economy. It's because our legacy, colonial legacy, is that you have to, in the International Division of Labor, Nigeria is a producer of raw materials, just like Africa. And then you send it abroad for them to process and bring back for you to consume. There's no way you will ever develop if all you are contributing is export of raw material and consumption of finished product. The finished products have high value, 300% more value. You will borrow money to consume those, which means you will perpetually be borrowing and you'll be bound with it. That's the theory. But then secondly, when you are import dependent, you are vulnerable to every conceivable global headwind. It doesn't matter whether it's financial, if it is COVID, it will affect you, because COVID stopped the supply system.
Exactly.
The supply chain disruption. It affected you because all your import was what you are depending on. Then you have Ukraine crisis with Russia. What have we got to do with that? We have oil, we have gas, they have oil and gas. But why? Because Europe depends on 40% of gas from Siberia. They were affected. Prices went up. We are import dependent. We imported inflation. Then America had in 2008. They had their property
challenges.
Yeah, the subprime crisis. What have we got with that? Are we buying properties in America? Our banks were in trouble. So Sanusi had to now put AMCOM in, and they gave them 6 trillion to rescue the banks. They haven't even recovered up to 1.5 trillion. So you can see that the transmission, you are in the transmission belt of every conceivable global shock because you are import dependent. But the moment you begin to add value to those things, and then even to tell you, the American, so European Economic Partnership Agreement wanted Nigeria to sign that 80% of our imports will come from Europe. Can you believe that? You sign 80% of. So what are you going to do with African trade, with India, with China, with Japan? So you're not going to trade with those. So I mean, these are asymmetries that you would experience if you were to go down that route.
Exactly.
The answer is productivity.
Exactly.
And productivity is not just on natural and mineral resources, but on human capital. India became what they are because of the software regime that invested over. I mean, that's a long story. But go to Silicon Valley now. See Indians. Modi, Prime Minister, was asked, who runs the world? He said he doesn't know. But all he knows is that the 100 biggest companies in the world are run by Indians. And I quickly went to check. I was Microsoft, India. Apple,
Amazon.
Oh my God, I was checking. The last ones are India. The new ones are India. The ones to succeed them are Indian. You think they did that by buying up this company? No, intellectual property. They invested in human capital development.
Now, Prof, let's go back to the currency swap again and take a critical look at issues of debt, euro bonds, and all those borrowing parameters that Nigeria is already in. Does this swap have any related challenges to them? Or will it erupt any big challenge to all those?
No, what happens is that the swap will reduce our appetite for external borrowing, especially in dollars. Because you are borrowing dollars to enable you meet your obligations. But that will reduce the appetite, on one hand. But the aspect that can touch the debt is when I said if IMF was to release special drawing rights as they did 3 years ago, 4 years ago. Yeah, so that was able to those countries that received their money. Nigeria got $3 billion out of it. But if China got like 25 billion, they can say, oh, Nigeria, we want to value trading with you. And you are owing us a lot of money. So come and take 5 billion from this and then use it to pay us. But it's a concessionary rate. So we'll jump at it, of course. And they'll give us preference because we already have swap with them. So it's all adding together to improve, to lubricate the trade flow. So, but if you're talking about direct link between this one and that, no. The appetite to consume is not coming from that. It's coming from government failing to control their expenditure.
Which is very critical.
This is the thing. It's the government that's causing all the trouble. Because they can't cut their coat according to their size. They're looking for money. They're spending money. They don't. Look, there's nothing wrong in borrowing. There's everything good about borrowing if and only if you follow the law. We have a law in Nigeria called Fiscal Responsibility Act 2007. That act says, yes, you can borrow, but under the certain conditions. One, it has to be a long term, which we understand to be 10 years or more. It has to be at concessionary rates, which we understand to be 3% or less. It has to be on capital expenditure or human resource development. And HRD is health, education, employment. Or enterprise. That's it. It doesn't say you can borrow money to share to people.
As per palliative.
No, it's not that law. But you can use all your money, income, your IGR, and if any development partner like World Bank give you grant, you can use it to share to everybody you like. No problem. But if you are going out to borrow, that's what the law says you should borrow. And then the law says you must have cost-benefit analysis to demonstrate that payment is is sustainable. But most of these things are neither here nor there, as we are seeing. What we are doing is really like promissory note. I promise to pay you 5 years, so bring the money. Or they'll call it budget support. Bring the money. But and then we are, in a way, we don't know how we are complying with the fiscal law, and that affects the state governments, the local governments, because borrowing is in the exclusive legislative list. So states and federal government, and local government, they don't have power to borrow. They have to come to federal government.
Exactly.
So that's why our reckless behavior, the borrowing behavior of the federal government is affecting the state government.
And that's if you have to react
and it's the big cause of inflation. Let me explain to you how it is cause inflation. When government spends more than they have and they violate the fiscal deficit to GDP, which is 3%. Now, I don't know, I've stopped counting because I think it must be over 10%. But anyway, what happens is this: the way they try to deal with that payment is they raise tax. And then raising tax here, a lot of people will shout now, okay, they don't want to go through that. Then the second one is to borrow money. To pay. They are borrowing to repay. For example, you are putting out Euro bond, 1.5 billion at 10% dollar for 1-2 years to repay loans that are long term. That is debt trap. The third way is to go and print more money. And people are saying the one you printed, we haven't recovered from it, 33 trillion. Now, let me explain. If the country produces 10 cars and you have in your budget 100 billion, 100 million, it means that each car is $10 million. Naira. So if you print more, let's say you printed 1 billion, there is now 100 million that is chasing one car. Because you have not increased productivity.
Exactly.
So people are now having to pay 10 times in inflation. That's what. Who pays? Is the ordinary. Who gets rich? The man that manufactures the cars and gets the money. But who pays for it? Who pays? Inflation tax is paid by everybody.
Now, you know why I wanted you to react to the recent debt profile of Nigeria, 187 trillion. And when you made mention of Fiscal Responsibility Commission, I'm still trying to get hold of the chairman of Fiscal.
I can send you everything. I can set up a meeting for you.
Exactly. So that I can come and explain why federal government are violating this law. Also, Debt Management Office this morning has released another 2 saving bonds, one for 2 years, one for 3 years. It's on sales now. It's going to end by January 27.
17-18%.
Exactly. Now, putting all this together, just like what I explained now, how do Nigerians now comprehend some of these challenges? Because it seems that these challenges will be here forever with the current administration of our economic policies and the way government is looking at money and spending money.
Okay, let me just give you a short response to that. The Fiscal Responsibility Act, which is being domesticated, over 25 states have domesticated it.
Exactly.
It should even have been domesticated a year after it was done. But Nigeria decided to let it go, and then that's why it's taking so long. Now, the biggest challenge around that is enforcement and penalty. Because if you have law and then you don't have penalty for violation of the law, and you don't have a speedy way of enforcing, then it's as well as not having it. That is the fate of this FRA 2007. An amendment has been proposed, which I attended Senate's brief session there, about giving prosecutorial power to the Fiscal Responsibility Commission to be able to say, all right, there's infraction here, and then tomorrow you are going to court or pay, something like that. But what is done is that they will have to write a report, they go to Attorney General will consider whether it should or should not, then you go to AFCC, 4 years, 3 years, nowhere. It doesn't happen, nothing happens. So you might as well not have it if you can't. Then the penalties on these were nothing. Now, the penalty is any officer that does it, infract, pay 1 million, go to jail 1 year. Not all, it's both. And anybody who is privy to it or who is an accomplice goes in with you. So then civil servants will now, when you start enforcing that, civil servants will say, please, don't give me, not direct me to go to jail. So no longer I'm directed to steal and then I get to jail. Your wife would disown you. You know what I mean? So that is the area. Can they pass the law, the amendment? That is the biggest challenge. And then the thing is that you have a law, a fiscal law that prevents you from stealing ab initio. But you are spending billions and trillions trying to fight corruption when it will cost you nothing to apply the law that allows you not to steal.
Exactly.
That's the challenge that we have.
Now, Prof, we're almost rounding up. But before I let you go, before we round up, you know, President Tinubu have called for an increase. Your own understanding, you have made it clear.
Increase in what?
In the currency swap from the 2 billion that the Chinese government is already planning to
definitely.
Now, in your own view, how much do you think the government should go for?
Well, I've already given you an analysis of the quantum, the numbers.
Nigerians still want to know.
It should be around $5-6 billion because the maximum limit should be about 12.8, which is 10% of our purchasing power parity. But 20% to 30% of your trading volume is like overdraft facility. If you have an overdraft facility with a bank, the bank says, oh, I can see your cash flow.
Exactly.
Or we'll allow you up to 20 to 30% of the value of that cash flow to trade. So what's wrong with that? Because don't forget, it's not a one-directional trade. It's a two-way trade. So you should increase it to 20 to 30%, which means increasing it from 2 billion to anything between 4.5 to 7 billion. So that is fine. That is makes sense.
Exactly.
Because if you say, okay, let's divide it, infrastructure will take 2 billion, and then the other one 2 billion, 1 billion, 1 billion, because you have infrastructure, you have capital expenditure, you have human resources. Then you have swap, not swap, the portfolio investment. They have consumer. Consumer will eat that one. Consumer people.
Exactly. Importers. I think these are clear analysis from Professor Ken about this currency swap. But time is not always on answer. But I see one question that is very, germane in my heart that I need to ask Prof. Going forward, because you have analyzed all about what this currency swap is all about. But the challenge with our government, which most Nigerians don't understand, is that when this money come in, we don't know when it will come in, we don't know when it will be spent. Then the next time we are hearing they are looking for another one. So what would be your advice to the government concretely in this regard? Because I won't let you go without pointing a better suggestion for them.
Well, the government has actually started doing what they should do, because central bank has negotiated, and then they probably have told them, this is how far we can go. So you need political intervention. So the president should screen. So it's now going to be political decision. Rather than so it's moved. So it's moved it up to political decision, to the political sphere, which is the highest, the ultimate. And then to push it, because the fact of the matter is that they invited Nigeria to BRICS.
Exactly.
They said to them, look, I want to come to BRICS, but look, solve this one first. And then we are serious about this business, solve this one first. In fact, see what this problem with, if you want us to shift from dollars, solve this one first. So he has the leverage to say, look, nothing happens until you move this
beyond 2 billion.
And then, of course, you have to also weigh macroeconomic risks. Because how much of the Nigeria reserve will be marked for the yuan swap? You don't know.
Exactly.
We know it's gone up over 40 billion.
40.88 billion US dollars.
So we know it's gone up, but we don't know how much of it is free and could be marked. That may be a consideration.
Exactly.
And then also on their mind, also weigh the fact that they will also be watching your currency, your forex. Because don't forget that at a rate, they may have fixed it at 1,005 or something. But what if it starts drifting to 1,800? So they need the assurance that you are going to fight to defend that currency level, or if improve it. Do you understand? So they're worrying about inflation as well. Is inflation going to start coming down? Because inflation is another issue that affects the value of your money, that affects so many things that trade. So is it that? Are you going to consciously support the trade volume increasing between the two countries and not to shunt us out? Some of these assurances might be necessary at the political level. At the political level.
Thank you so much, Prof. I can't thank Prof. Ken enough. I've had opportunity to sit with him on different fora, different platforms to analyze Nigerian economy, and you can hear from him directly. The currency swap is a good one, but for him, the government must match its word with action, particularly ensuring that those economic parameter, macroeconomic parameter is worked on. Is it inflation? Is it currency stability and trade volume with China? Prof, thank you so much.
Thank you,
thank you so much. Although, with my permission, I think we will come back and discuss this China aid to Africa. It's very, very critical. We need to look at it. Just recently, I think 2 days back, Ghana is trying to do one or two things to receive aid from IMF. Can they also look away of China? That will be one of the bottom of our discussion when we bring you on.